Good morning, peoples. Let's jump into Rex shares. So, I wanted to go over the Rex. Obviously, they're monthly payers, the FEPI and API, AIPI. So, I'm going to give some bit of detail. So, this is probably a 15 to 20 minute or but if you just want to see the early part, you can look. But if you want to understand how they're generating the money, what they own, et cetera, you can go through. So first 5, 7 minutes, I'll just go through some of the basic stuff. All right, so on FEPI, what does it stand for, or not so much stand for? It's the FANG and Innovation Fund. Their other fund is their AI oriented, AIPI is the uh, ETF symbol. So let's take a look. And what I'm going to do is show you all the last payments for FEPI, then API. Then I'm going to show you the summary that says what is the real year to date or annualized and what is the um, total return. So this first one is easy. I actually had it done yesterday. I just didn't get around to uploading it. So it didn't give you really a chance to buy it, unfortunately, because by the time you see this, it's going to be into the pre market on the morning of the 26th. So the declaration was 25, the X date is 26, and this one will pay on 27. So you really don't have a chance to buy it. But this is really more of an education going forward. And for those of you that may own it, great. You know, you probably already found out what it's going to pay. But if you didn't, these are intended to be educational to really compare, contrast, get into detail. So on 11/25 was the declaration for FEPI. The X date was the 26th, and the pay date is Wednesday the 27th, which it already is in the US. Early morning, depends on, again, what coast you're on. So they've been rotating lately between $1.09 and $1.08 over the last 4 or 5 months. You can see previously they had a 115, a 116, a 109, a 119, another 119, a 120, a 118, and a 115. So what's really cool is my annualized numbers for this when I go to the other sheet are going to be annualized. They'll be 1 year, right? From the inception through all the payments, so it's easy. I don't need, I still do a formula, but it just works out that it doesn't multiply it by any factor. It just multiplies it by 1 instead of like 1.2, 1.8, 6, all depending on the number of days that the fund has been paying. Okay, guys, so these are all the payments. So 109 is what FEPI paid. Now, the price of FEPI is 52.26, okay, as of the close of 11/25, I believe. Um, but you know, it's not going to matter right now too much. So you can see that this is a constant 25% payer. Okay. So we want to see, well, is it declined? So do we subtract something for NAV erosion, right? It's been pretty consistent. And then let's compare API, okay? And it has a shorter track record, right? 5 months, 5 months of payments. So you've earned $14.74 if you've owned this for the all 12 payments. Is it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11? You would have gotten 13 payments, but the inception date is right around this early date. So they started and paid. I have that on the other summary sheet. Now, you can see since the fund has been doing things, it's down $1.74. Because what I do is I come out and say, okay, the first payment date excuse me, here's the price, and you can see the reds and the greens, right, up or down. And here's API. API's actually up 56. It's paid $7.40. So in 5 payments, it's trending ahead of this guy. And you can see it in the yield, right? Look at the price here, 53, 52, so forth. 34, 33. Pretty consistent also. All right. So let's do the summary, and then I'm going to get into what do they actually own and how are they generating their money. All right. So here they are. Here's the inception date. It actually was 11/27 inception date. Okay. Excuse me. So the dividend return, considering that the days owned is 365, right? Then, and that actually is, I can take this away because it's rolling up to 366 as we go into today. All right. 366 and 176. So the reason I have different days owned tracked is because I use a different multiplier, right, to get the annualized number. Um, so the real dividend return on this 1474 is 2730. Okay. Now, did it lose money? Yes, it went from 54 to 52.26. So it's down 3.22, which it stays right at that number, basically 321, right? Because now we're 1 day past the period. But that's how these annualized numbers work. So I'm saying your total return is 2401, but if you're just counting your yield, right? You're just counting how much have you gotten in payments and what did you pay, again, assuming you got it at inception, you had a 2722 dividend annualized. Okay. Now, what about API? API's doing a lot better. Okay. Where is the differences? Well, the big difference is it's up, although it's over 5 months, right? It's over this 176 days, actually. I don't know why that one should go the same. Okay. So it's saying its dividend return is 14.6. Well, why? Because you've got less payments and yet you paid the same money, right? So that's why we always annualize it, right? And when you have 1 month, let's say they paid 50%, then it would show it annualized being a 50% yield, really, really high. But this one, dividend return is only 1460, but when we annualize it, it's beating the other one, which actually has 12 months, 13 months of payments, right? So but here we don't go down any, right? Here we go down 321 from 2722. This one we got a 5.85% annualized, only a 2.82% actual gain, right? Went from 5067 to 5210, okay, over that 176 days. So that's a 282 number to look at. And actually, let me put it in here. One of them I used to calculate the dividend, and on the other one, yeah, and it's already back to like 50.75. So you're losing some of this as of the close on the 26th, but you can do your own tracking of that. So of those two funds, clearly API is outperforming with a 5-month track record versus a 12-month track record. All right, guys, let's jump into what do they hold so you can see a little bit of difference. Well, there's no Netflix, okay, and no Tesla. And you would think in the AI they would have Tesla, but they don't. So there's no Netflix, there's no Tesla. Otherwise, almost everything listed here is also in API, and a lot more. Okay. So here's an interesting thing that I did for you as well. So how do they make their money? Well, they write covered calls, but guys, they're not synthetic. They own the underlying. They buy the underlying. They write what we really call a true covered call. And then if they get called out, so be it. And ideally they don't, or even if they're going to get called out, it's very close, and they simply can choose at a small percentage to buy it back and rewrite it. Now they're writing at a month. They're not writing like EOMax weekly and some of the index funds daily, but mainly they're own the underlying. So they want to get as much money as they can. Now, it is true if you write weeklies, you get more. 4 times the weekly is typically a little bit more than 1 month. But the reality is you have more time for it to even out over the month. So I like this approach. I mean, getting a 25% yield, again, you have to have the market perform in order for you to actually get this kind of return. If these high techs in the NASDAQ 100, which most of these are in, if they went down 30% in the course of a year, you're going to lose money on your NAV here, and you're going to make a little. You might have a net loss. It wouldn't be very large, but I could see where you had a 20% NAV reduction and maybe a 15%, winner in capital income. So I got a 20% on one and a 15% on my income. So I actually lost 5%. But over time, you're going to do well in these kind of things. All right. So here's some of the things, and here's what they're doing, right? So take Microsoft, and they have multiple instances of these. So Microsoft, for instance, they've got a 440 call. Well, what's the current price? It's 427. You know what I started? I didn't put the pennies on these, and then I said, "Oh, I'm just going to grab the pennies." So I started actually putting those on. All you should care about is what's the IV? That tells me how well it pays. So what I've been doing, I didn't on this one because it's a smaller amount. Okay, but I was highlighting on the next guy in dark green the implied volatilities that are in excess of 50%. And sometimes it's the same company just listed again. Because what they do is they sell different calls. And especially these stay on board because they're out there over a month, or in some cases more than a month, but usually at least a month. All right. So we have Tesla, and we have Micron Technology, and we have another Micron. So that is our green guys. Now, what's a red? Okay, so again, it's not always bad. I've heard other YouTubers talk, oh, they're getting killed, they're getting slaughtered. I mean, they're way out of the money. Well, that's not really looking at it realistic. Let's go through that scenario. I'm going to do a real simple one. So you buy a stock, you buy it for $8. Okay, you write a $10 call. You get $1 for that $10 call, right? It's a month out. So the stock runs to 20. Like, oh man, you got killed. Yes, you didn't make what you could have made if you just owned the stock and didn't write a call, right? You would go from 8 to 20, you'd have a $12 gain. That's 100%. Pretty impractical, but it does happen in the real high IV stock. Like AIPI has some of those, okay? But you still made $3 on an $8 stock. You bought it for $8, you sold a 10 call, you got $1, and it got called out at 20. They just, they took it from you, and they only paid you $10, but they paid you 10. You bought it at 8, and you collected $1 on the call, which you got to keep. So you got 3/8, guys. That's 30 something percent, right? So that's pretty darn good in a month. But So you didn't get killed. It's just ideally you want to keep winning. You know, an $8 stock that went to 10, what if the stock was 10.05 or $10.15? If I still liked it as the fund manager, spend the 15 cents to buy it back. You got the dollar, right? So now you can write a 12 or an 11 or a 13, or you can write a 10, and you can write it for a lot more money, like $2, right? 2.50. If you could get $1 when it's $2 ahead of the stock price. So there's all kinds of strategies in here, but I hate to see it when people are naive and they say they got killed. Now, where you get killed is if you bought the stock at $20 and the stock drops to $4, you wrote a $20 call for $3, right? But the stock dropped to $4. Man, you did get killed. You really, really got killed because the stock is way underneath. Being way over just means you didn't participate in the gain. But if you guys remember when I talk about income investing, I like it sometimes, but there's times where I go, oh my God, I want BTC. Do I want to go buy Misty anymore? No. Misty pays $4 sometimes, but guess what? I go out and buy MSTX. Rex has one too, or Crane shares. I forget who. I think it's Rex. So they have a double. Defiance has a double. MSTX. The last time I bought it, I got 80% gain in the stock in 3 days. You're not going to get an 80% gain, okay? You're going to get, if you buy Misty and it's $35 and you get four, you know, you're going to get 10% in a month. And sometimes you might buy Misty at 20 and it goes to 45, but pretty soon it'll be back to 22 because they're paying out that kind of money. So there's a strategy based on bullishness. I know some of you income guys. So I'm telling you, this is pretty good. I like rec shares on what they're doing. Sorry about going into my tangent, but I think it's worth mentioning. So what if you just want to keep it, right? Like they bought Nvidia, okay? What we don't know is what they paid, okay? Well, we know Nvidia's only been like one in the 150 right at the edge. So right now it's 136.92. So they've written a 155 call, and I can go back in and see the detail of how much money did he get. $1, $2, how much did they get? $3, $5 for that month. It's actually pretty good that they're not getting called out. Now, if they bought that stock at 149 and this thing keeps on dropping, then they would have to keep writing. So one could argue that it's not bad at all to get called out. So I don't always view these as favorable. I like the ones that get close. Okay. So this says to me at Microsoft, they wrote a 445 and it's at 427. So they're a percent out of the money of that call, which means they can write it again, right? So when you're not close to out of the money, so what I started doing is highlighting the ones where they drop below. Like this one's perfect. It's 872.6 and they wrote it the call at 870. We'd have to go in and examine, did they buy it at 850? Did they buy it at 840? Right? So you need to know that. But the idea is they want to make money on their calls. And this one, if it keeps going, now these don't expire till 12/20, which is they tend to go out, right? So they got almost a month left in these. So you don't want to see this at 1,000. I mean, because you go, wow, I missed out on that big gain. But otherwise, you don't want to see this at 700 either. So hopefully they bought it at 840 or 850 and they wrote a call a good significant amount above what they own it at, and they got good premium. So there's a lot of factors in here, guys. All right, so let's jump the only other one. So here's AIPI. I've already taken you through the summary of who's paying the most, right? So AIPI, here's their holdings. See, they have Palantir. To me, you didn't see that in FANG. You didn't see that in what do we call the Rex FANG one? FEPI. You didn't see that in FEPI. Now, to me, Palantir is the number one software stock in the world for upside. I just firmly believe that. If you've listened to any of my stuff over the last 6 months, I've been talking about that. I absolutely don't want to own it in Yieldmax, even though it's done well in Yieldmax, right? Because it's just such a good company. It will be probably a 5 to 10xer in 3 to 5 years. Still, even, and I know they're going to tell you about rich valuations and yada, yada, yada. It's still a fabulous, unique, valuable company. CrowdStrike, again, the leader, okay, in hacking, security. I say they're not into hacking, but security protocols, right? Protection for these large data centers, for these large corporations. I mean, on a personal basis, I don't know anybody that hasn't been hacked. I had my Fidelity account hacked. Some Russians were in there buying Bitcoin and transferred it out immediately. They replenished my money and they gave me a little generator of code and all that nobody can get in that doesn't have that little app, and you have to put all that in, which was smart. I mean, this two-factor authentication, it just, all these data discoveries on the dark web. I mean, you got to change your password every 6 months, and if somebody like me who's old and has tons, and I probably have 400, 500 different kind of accounts and things that I have passwords on. You need a piece of software just to track that. So it's not easy. I understand. So anyhow, their holders: Palantir, CrowdStrike, Nvidia, ARM, Cash, Supermicro. Now, luckily, they're ahead of the game on Supermicro, right? We all know that crashed and then bounced, right? Anybody understands Supermicro was a high flyer, 1100, 1200, did a 10 for 1. It just let me pull up that SMCI. I'll pull the chart over here for you guys so you can see it on the screen. Oh, my internet is glitching. Okay, 50.75. But look at this thing, guys. Let me get a 1-year chart. Yeah, there we go. Look at this thing. It got down to like 15, $16 or so. This is after the split. Remember, it was $1,200 at one point. So you see this big downdraft. And what was it from? All about fraud, accounting. The CFO cooked the books. I don't know who was in conjunction. But is it going to be delisted? I start to see Reddit thing. I haven't really done much research. I bought it a few times back in this sequence and just traded it, right? I never owned it and wrote calls. I just literally buy it one day, put an order in for the next day GTC to go off, 15% higher. And I got in it, and then I started getting nervous, right? Like with this, I didn't trust it here. So luckily I wasn't in it. I think Ulti owned it a lot. Hopefully Ulti didn't get too killed, but I suspect they probably did because they were in it for a long time. All right, so um, good stuff out of this guy. Let's just go here to their covered calls real fast. I'm almost done. If you're already gone, I understand. So here you see Microsoft, Qualcomm, Google, IBM, Palo Alto. I have a friend that I used to work with. We actually golfed together in a pro-am celebrity thing. He's now president of BJ Jenkins of Palo Alto Networks. Dynamic, brilliant guy. And they are a little more of the legacy oriented security side of things, network capabilities, and also security, whereas CrowdStrike is much more modern in their deployment in the networks. But Palo Alto is a good company making good money. So they're a high flying stock. Amazon, Apple, Meta, Qualcomm, Broadcom. I talked about them before. They just repeat. Cadence Design, Arista Networks is in here, Adobe, IBM. Some of these are conservative. Datadog, whatever they've done with Datadog. So what I did here, red, green, and yellow. I put the green over here when it's a high IV, but I wanted to show where they're close. So once they got to a low 1% above where they could be called out, and remember, they got a ways to go. So here's Microsoft. They wrote a 430 call. Current price is 427 and change. So they're close to getting called out. But again, is that the worst thing that can happen? Absolutely not. IBM. But here, look, they wrote a 215 call, so they're never going to write a call where they're losing money. They're always going to write a call where they're making money. So this is not a loser. It just means, though, you're going to get your stock taken away from you at 215, and you're going to get to keep the dollar, two, three, four, whatever you wrote it for. And then you have to know back in your records, what did you pay for it? 210, 211, 208, but it's at 228. So, if you'd have tried to write a 228 call back then, you would have gotten pennies instead of dollars, right? So this is going to happen. Much better to have it get taken away and you get your 10 or 15, 20, 25% in a single month. That's pretty cool. Um, and actually, I start worrying here. They wrote a 190, the stock's at 160. So, what's their purchase price? I have no idea. I'd have to dig through all of those records, and I'm done with that kind of analysis on a daily basis like I used to do for Yieldmax. But I still have all of those capabilities. Cadence, they're behind on. IBM again. Datadog again. And then I was mentioning SMCI. Datadog has really moved on them. And that's not that high of a, they must have done something uh, very good. ServiceNow, I had a friend that was VP of sales at ServiceNow for a long time. He's moved on. Look at this IV of Arista Networks. I know of them. I don't know a lot. Let me take a look at their chart to see what is driving their. So that high IV again, people, that's going to tell you the premium that you're able to generate in the options. Yeah, this is slow. My primary internet, the line got snapped and they're coming out to repair it tomorrow. So I'm using my backup. Yeah, this is a nice chart. Look at this Arista network over the last year. That's just continued. It's down here at 225 and here's 425, almost a double. So if you just draw your parallel lines, right? If I draw a parallel line touching these, I can see what my resistance down is, and then I see what my uptrend. So this thing could continue up to 450. Beyond that would be a massive breakout. And if it dropped down here below 275, 265, then that's down below resistance. So those would be major pivot resistance points. But a nice stock. So I can see when you have a stock that doubles in a year, you can see why the IV is high. So that's what I got for you, people. Look at how many of these in the AIPI, and they repeat. There's probably only 20 or 21 unique companies. Look at some of these super micros. So again, what's great is they wrote a 23 call. Well, I can tell you they didn't buy the stock at 50 or 40 or 30. They bought the stock below that price in all likelihood because I look back, they didn't own it in the previous month. So they're going to do okay. It's just they may not make what they could make. So that's why this 49 is saying, hey, there's a high probability this thing's going to get called away. Of course. But that's not all bad, especially with a stock like that. I wouldn't want to sit and own this where it's high flying, but maybe it gets delisted. It's not going to get delisted by price. So again, more Palo Alto or Arista. You got some conservative companies like, I mean, they're big. Adobe is one of the most massive software companies, but they're a slow grower when you compare to something like Palantir. IBM, that's ancient. I mean, I used to go to IBM tech schools all the time and work for IBM at one point. So I know well about where they were in their day as opposed to what they are today. All right, Palantir, CrowdStrike. All right, guys, I'm going to let you go. Again, this is Bruce with Targeted Wealth Creation. This is not financial advice. I'm not a financial advisor. Couple of good stocks, funds here, ETFs. Okay, if you believe in AI, this one's going to pay. FEPI is more of a FANG innovation type, but I'd say they have 80% overlap. It's just AIPI, just by the fact it's got CrowdStrike and Palantir. To me, those are two giant winners over time, massive winners over time. In the case of CrowdStrike, it's been a winner over time. All right, guys, I'm going to let you go. Bye for now.